Richard Sandor is one of the pioneers in financial derivatives and the environmental markets arena as the founder of the Chicago Climate Exchange. Now, with his second book, Sustainable Investing in Environmental Markets, Sandor talks about how far this asset class has come in the past 12 years and why air and water should be priced like other commodities today.
If you go away from Washington, Reggie, alive and well, readjusted its reduction targets. Europe, functioning well, need to and recognize that there will be structural changes regarding lowering the targeted reductions or making them stricter. China, 7 pilot programs going. Shenzhen, actually, carbon is the only commodity in Shenzhen or anywhere in China that is convertible into US dollars. I think the Chinese are sending us a signal. And while they talk about goals of 2020 and 2030, my experience in 25 years of going to China and actively going in the last 12 years is they're very serious about this. You have to look outside of the lack of activity at the federal level, study more deeply what the EPA is doing, and most importantly, look to California, look to China. California, for good or bad, is where all trends tend to start. Whether it's social media, Facebook, stuff that we may not like, but it is a definitive trendsetter. And I happen to believe that China and California are the best indicators of where the future is going with environmental markets. There's only 3 parts of the world that are long water: North America, South America, and Europe. Everybody else is short. Africa is short, Australia is short, India is short, China is short, the Middle East is short. And I believe water quality, and we're still dealing with that in the United States. At CCX, we advised the state of Pennsylvania on a water quality market. And we still have agricultural runoff causing dead areas. The Western drought and California's situation, we need to create a market for conservation credits. We cannot continue to grow cotton at zero price waters in the desert. We've got to think about shower heads that conserve water. You got to price water and building golf courses in the desert. We have a serious issue. I think it was Mark Twain who said, whiskey is for drinking and water is for fighting. And so that reflects your, very probing and smart question. And I think the answer to that is we're not talking about the natural human rights to water. We're saying that's exempt. You get that. I get that. Every man, woman, child on the planet needs 30 gallons a day, and that's not what we're talking about. We're talking about pricing everything above the individual's necessary requirements for hydration and hygiene. And that's what we're talking about. Use excess water. That's where the price is. Price the conservation of water, not water itself. And we have an entire mechanism, which is the envy of everybody in the world, that gets poultry, pork, beef, vegetables, row crops, beans, corn, wheat, all on the table for food, and people could argue you're putting a price on food. How can you do that? And my belief is it's no different than putting a price on air and water. Food is critical. It's worked for hundreds of years. Why not use those very principles developed here in Chicago and then apply them to air, to water, to endangered species? And hopefully my kids and grandkids and yours will say, geez, I don't understand why everybody was so, agitated about pricing air and water like you price food. So I believe as widespread as interest rate risk management is today, we will have those same opportunities and needs in these new asset classes.